So that takes care of the operating section. Now our next section, remember, it flows, so the next section is the investing section. So let's type in cash flows, investing activities. All right, now investing section deals with long-term assets and investments. So let's go back to our comparative balance sheet. Now we've already analyzed all these accounts, but let's go down. All right, long-term, so here are all of our current assets. So property, plant, and equipment is a long-term asset. If we had any investments, then they would be in their own section as well. So we've already talked about both building and equipment. We talked about that this $2,000 increase in equipment was actually caused by two different things. One was depreciation, and one was actually the purchase of equipment. So when we factor in that $8,000 of this change was a decrease in depreciation, then that $2,000 becomes an actual increase of $10,000 purchase. Okay, so, and again at the bottom here in our other details, just lost my other details. Remember, it told us that we didn't have any other items going on or other activities going on with equipment. So that $10,000 is for purchase of equipment. So if we go back over here, all we really need to put in is purchased equipment. Remember, in the operating section, that one's kind of the most, I guess, confusing one usually. The investing and the financing, we really want to go through and look at what activities go there, where did cash come in, where did cash go out. So this is long-term assets or long-lived assets and investments. So equipment, we know we purchased it. How much cash did we purchase it for? It was $10,000. So that's a cash outflow of $10,000. So we just put -10 there. Okay, and that was, again, the only thing we have here for long-term assets or investments. So this is our entire section. So we can come here and say, all right, this is net cash flows used for investing activities, because this was a negative. So this was the overall use of cash. Where in our operating section, it was really an overall inflow of cash. Okay, and there's only really one thing, so we don't have to sub-categorize it, but we will, okay, just to keep our same thing. So the next section we have, again, it flows, is financing. So cash flows from financing activities, okay? So we've taken care of all of our current assets and current liabilities in the operating section. We've taken care of long-term assets and investments in the investing activities. Now we're going to deal with long-term liabilities and equities in the financing section. Okay, let me scroll this up so we can see it a little bit better. So let's go back to our comparative balance sheet here. So now we're dealing with long-term assets. Well, we really only have one, that note payment that we talked about. And in our other details there, this told us this decrease was paying principal down on this note. So that was a cash payment, and we know that. We also looked already at our equities. Again, we kind of did our analysis already. So we know that the common stock and this paid in capital in excess of par, this was stock that was issued for cash. So this overall change of $800 were additional shares of stock that we sold and received cash in for. Okay, so those two things we've already discussed. So let's go put those on our cash flow statement. So in the liability section, we know that we paid cash here. Right, we paid down the note. We paid some of what we owed, some of the principal of what we owed. So we're going to come in here and just say principal. Oops. Well, I can't spell today. Okay, hang on. Principal. There we go. Paid on note. All right. And that was $1,200. And that was a payment. So we're going to put a negative because we're showing that this is a cash payment. Okay. And then the other thing we just talked about was we know that we issued common stock. And we issued it for cash, so this is a cash receipt. We got $800 in cash when we issued out the stock. So that's a cash receipt or an inflow of cash. So it's a positive number. Again, in investing and financing, we simply want to know where did the cash come in or where did the cash go out, and show that positive if it came in or that negative if it went out. Okay, inflows and outflows. All right, let's go back one more time. And okay, so notes payable we know about, the stock we know about. Now retained earnings. And we've mentioned this before. There's 3 things that can go through there. And again, for your kind of basics, we talked about some of those extra things that we could see. But just your basics, you've got revenues, expenses, and dividends. All right? So if we look at our net income figure that we talked about before, and let's go over to our, oops, I meant to go to our income statement. Hang on. Oh no, the wrong thing just moved. Hang on, recording problems. No. Well, I can't get back to my tab that I want to get to. But if you notice here on the retained earnings statement, it'll tell me the same thing. What happened with retained earnings? If we just looked at our income statement, and that's where I was trying to click, my record button is actually in the way. The net income was $12,900. So if we look at the comparative balance sheet, if we took last year's balance and added net income to that, then we wouldn't get $12,900. Something else happened there. And again, on my retained earnings statement, it's very easy to see what happened. We added $12,900, but then we also deducted $6,000 from this. And so that's my overall increase, and now my new balance in retained earnings, which again is the same thing that we see here, and we see that change of $6,900. Again, 2 things caused that change: net income, and we had some dividends that were paid. So we're going to record those. Those were cash dividends. They were a payment, so that's a cash outflow. So I'm just going to put here paid dividends. Negative $6,000. Okay, so those are all the things. Again, if we look back, we've taken care of long-term liabilities, we've taken care of all of our equities, anything that happened there that might have impacted cash. So those are 3 items that we have in the financing section. So we're just going to get the total of these, and that again is a negative. So this is a net cash flow used for financing activities. Okay, we'll make it a little bit prettier. All right, so now we've done the 3 sections. There's operating, there's the investing, and there's the overall financing. So what happened with cash? So overall, if we just add up these 3 things, what happened? Overall, that was a positive number. So my cash increased for the year. Now I can just kind of make a generic increase or decrease. So either one, I've got a heading here for this. But we increased cash this year. And again, if we go back to the comparative balance sheet, there we go. Look, we already know we're right. Okay, so we got the right answer. We show an increase of cash of $29.83. But we want to extend this out so that everything agrees. So we want to say, okay, what was the cash at the beginning of the period? Oops. And it was 103.2. Again, if we look right here, that's my beginning cash. Okay, and then if I add those, since that's an increase, I'm going to add it to my beginning cash. And that means that cash at the end of the period should be $4,015. Let's see if that's right. Ta-da! There it is there. There's our regular, not our comparative balance sheet. Yes. So we have successfully completed the cash flow. Now, also at the bottom here, if we had any non-cash investing and financing activities, so let's say that we did issue common stock, but we didn't issue it for cash. We issued it for this equipment. Then these 2 items wouldn't actually appear here. I'd have something down here because they wouldn't have affected cash. I wouldn't have paid cash for the equipment. I wouldn't have received cash for stock. I'd put down here in a non-cash investing and financing activity section that I issued stock for equipment. And that way I'd know why those things changed, but it didn't have them on my cash flow statement as cash payments or cash receipts. All right, so we can pretty this up a little bit. I need to move all this over and make it look all pretty. Uh-oh, what happened? Nope, see? That's what happens when you make things pretty and you don't pick everything like you're supposed to. So we can make this look nice. We might have some formatting we want to do. But as far as, and put our dollar signs where they need to go at the beginning of each column. And at the very end, we can double that up to show that we're done. but overall we're pretty good. So there we go. We have completed a cash flow statement.